On behalf of Biz Talk Today TV and Crosscheck Media, welcome everyone to a very special buy, hold, sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith. And it's sunny and hot, Scottsdale, Arizona.
Yeah, baby.
Toby, how is the weather out there? You got the Grapefruit League. Have you been to any games?
I went to 2 games. I'm a Dodgers fan, and there's not a lot of grapefruit Dodgers out here. So, we were just talking before the bell. Professional sports this year, baseball is going to be extremely interesting. And I do not understand how the Arizona team is rated so highly. So I have bet against them, Todd, just FYI.
Fantastic. We'll have to see how my Baltimore Orioles are going to do this year. It's going to be tough, but who knows? But with us today, and I know a guy that's been hitting it out of the park ever since we had him back on Buy, Hold, Sell a few months ago, and that's Scott Ladner. He's the CIO at Horizon Investments down in Charlotte, North Carolina. Scott, welcome back to Buy, Hold, Sell.
Yeah, I appreciate it, Todd.
Are there any basketball teams down that way? I can't remember.
Not anybody we care about. All the wrong shade of blue.
Absolutely. Well, yes, that's right. We are right smack into the middle of the NCAA tournament, and we could get into that later on. But Scott, let's start talking about the markets. One thing that we are seeing today is a sell-off. We were up big, now we're down big. We see the Mag 7 stocks are all getting hammered, and then you have all this talk about tariffs and auto tariffs, et cetera, et cetera. Is this just going to be a repeat pattern for we're closing out the quarter, so we expect the same in the second quarter, or will things start to stabilize?
I mean, look, they're going to start to stabilize at some point. I mean, the reason that like this year's story is pretty easy, right, guys? I mean, it is basically stocks got derated, especially Mag 7 got derated, not because of rates, which is usually the thing that derates the stocks, but because of uncertainty. And the thing about uncertainty is it doesn't last forever. Like at some point we know some of this stuff. At some point, like we know what the policies are. At some point we know the operating environment again. And at that point, like we're gonna be fine. But you look, we just gotta muddle through it for right now. And April 2nd, the option market is not pricing April 2nd to be anything particularly special. Probably because it's going to be like we got to figure out what the response to everything that's coming out on April 2nd is going to be for us to really understand the sort of the picture and the impact on economies and markets. But it's at least the beginning of the end.
Okay. Well, Todd, I sort of beg to differ here. I mean, first, obviously, what was my line a couple of weeks ago? The only thing that we're confident in is we're not confident in anything. There's no continuity.
Certainty of uncertainty.
Yeah, the certainty of uncertainty has not changed. I would argue that on last Friday was the classic dead cat bounce where everything was oversold. The short-term algo guys loved that, and they came into the same 10 stocks that have led the market down. They came back into them for about 2.5 days and then got out because that was an opportunity for a trading hedge fund, which is not our guest's focus at all, of course. But it had every imprint of just what I used to do as a hedge fund guy, which was, hey, let's hit the top 10 most volatile stocks right now, buy, and then we'll probably give them 72 hours. That's exactly what happened. Remember, we got this exciting statement from President Trump that he was going to pull back on these, April 2nd deal. Well, everybody was so convinced that there was going to be Armageddon. That was, the classic relief rally.
Yeah.
These have been psychological rallies. The economics didn't get any better. We're getting into earnings season. So I call it a blip. I also, for our money management clients, we've been in the defense is the new offense. So I'm looking at our list today, and geez, Cintas, the uniform maker's up 6%. That's like a tech stock. Cintas never goes up 6%. Philip Morris with those new packets you put underneath. I mean, healthcare. This is just classic. Let me hide until this shit show somehow resolves itself. Right. And maybe I'll trade some tech stocks when they get oversold.
Yeah, that makes sense. Scott, I have to say, though, and Toby is right, we are in this middle of all this uncertainty. We know it's going to happen, especially with this current administration. But markets are still higher for the year so far. I mean, slightly. You see the Dow up 1+%, but you have the Nasdaq up 3%. Yeah, I mean, we're not knocking the ball or cover off the ball, but still, we're still up for the year. The question I have for you, though, is that should we look at the more of those defensive names like Toby was mentioning to go forward, or would you consider being a little bit more aggressive, knowing that we are up for the year?
Yeah, I mean, look, I think it comes down to your time horizon, right? I mean,
Yeah.
if we're talking like weeks and or a month or two, yeah, that's probably the right play because we're not gonna have much certainty. It's almost impossible for the certainty to be resolved in the next 4 to 6 weeks.
Yeah.
And so like until it gets resolved, like there's really no place to go. Like it's just there's a ceiling on the market until we figure some of this stuff out. And so yes, if that's our time horizon, I think it's a great plan. And I agree with that. It's if we're looking at it a little longer, then maybe not so much. And if if you're able to be more nimble, then you can do something like that. But yeah, the next 4 to 6 weeks, we don't see a whole lot of especially like explosive upside because there's just it's impossible to get certainty around some of this stuff.
Yeah, no, you made a great point about we have a ceiling, we have a floor, and the floor appears to be the algorithmic. Today I was looking. Again, 74% of all trades were algorithmic. They were from a bot. They weren't from. So we're in that floor and ceiling, back and forth, and that's what markets do when they're confused, right? I mean, that's what they're saying. I'll take a little bit. We try to tell our investors that, really the 310% we made over the last 2.5 years would be 60 years of gains. Okay, so let's come back to reality. We have a new regime. The regime is different than any political regime we've had since I don't even know when. And there's because there's no way to hedge. I guess what I'm trying to get at. How do I hedge Trumpism? How do I hedge the fact that the dollar value is going down? How do I hedge inflation coming back? I mean, usually the hedge is, hey, put some futures contracts against the portfolio and I'll sleep better at night. There's no playbook here, at least that I know of, on how to hedge 4 different macroeconomic factors all happening that are completely, opposed to each other. I mean, it's the craziest time I've ever seen, and I've resorted to drinking heavily, and it's helped very much.
Scott, how about that though? Is there a place to hedge? I mean, what would you recommend to a client of yours that contacted you and asked the same question?
Yeah, I mean, look again. Time frame matters. If we're talking weeks, then it's probably just hang out. Like I mean, or there's plenty of hedge equity strategies, kind of collar strategies you can get into that you'll be involved, but you're not going to be really super involved for a while. So it's a toe in the market in case something really starts to pop, and because the timing on some of the stuff somewhat uncertain, that's a way to at least like kind of put a toe in and not go kind of crazy. The other thing though is get and Toby like alluded to this with the dollar going down. There's a reason the dollar is going down, guys. I mean, it's fairly logical. We have negative growth impulse in the U.S. and positive growth impulse in China and Europe. That's feeding through into nominal rates and that's feeding through the currency. It's like sort of the classic academic way that you get currency moves. And so if that continues, which it may for a few quarters, like international is a place to hide. I mean, like EM's safety at this point. Europe is safety at this point, and I think this is a quarters type of trade. It's not a years type of trade, but if the dollar depreciates broadly against both kind of EM and DM stuff, you're going to want to be in Europe and emerging markets.
Yeah, I find it intriguing that we normally would say if the dollar's going down in value, then that helps the global technology companies who sell in dollars because now their services are cheaper if you're paying in pounds and now you get to lower dollar. But that's out the window. That's another rule book that's out the window.
Yeah.
I was going to say, because I don't have to actually watch the market. All I have to do is see my text lists in my emails from wealth management clients. That's all I have to do. I can, I have four texts here.
Yeah,
it's such uncharted territory that everybody's come up with what's going to be the new strategy in the short term. Get me through this quarter. Get me through when we find out what the actual tariffs are going to be. And for me, it's just classic defense. The electric power companies that didn't run up 500% because they have an AI thing. Certainly a lot of the healthcare, a lot of the Becton Dickinsons, the stocks that no matter what happens, they're going to sell 400,000 syringes this week, that sort of stuff. And sort of the digital utilities. One of my favorites, one out here, GoDaddy. GoDaddy dominates in the small business. If you're going to get a URL and you're going to run it on blah, 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 GoDaddy, you don't get rid of it. Once you have your website up, you don't get rid of it. So that's what we're looking when we say defense. Stuff that is non-cancelable, have to have, like Cintas. You need those uniforms, you need those towels cleaned.
Yeah.
This is 100% different than Transformity Ultra Growth Strategy, because this is Transformity Stay Wealthy Strategy right now. And then we use a lot of high yield stuff and reinvest the yield and simply build wealth because you're just adding more of 15-20% dividends being reinvested. Value goes up after a while.
Yeah, I know Transformity Research is definitely on the ball on this one, and they're thinking of every scenario. Scott, before we go to break, do you see the U.S. economy falling into a recession?
No, they're like the underpinnings are still too strong. Consumers are still continuing to answer surveys like they're in the depths of COVID or in the depths of the great financial crisis, which is, it's a little odd, but it's understandable. It's just, you're getting inundated with news, inundated with all this stuff. And so, that is what it is. But balance sheets are in incredible shape. Corporate balance sheets are in incredible shape. And look, the AI thing's not going away. It is a massive tailwind. We're forgetting about it for a bit, which is fine. But it's going to be there for a while. And so, in terms of things that can sink the economy, you got to have leverage in the system to sink the economy. There's no leverage in the system. So that one's out the door. And everybody's still got a job that wants a job. So it's these things can change, but there's nothing out there that we see, at least in dodges to the system, that would lead us to believe that a change is forthcoming here in at least the next few months.
Yeah.
Yeah, I see that.
Todd, I'm totally with him. I would just like to say this, however, would you ask him not to wear my shirt on this episode?
I didn't want to say anything, but I was.
I mean, clearly, he's a fast.
I can take it off. We can go shirtless. That's fine.
Well, for those listening on Spotify, we actually can now play the videos on Spotify, so you definitely will be watching the show there as well. So you guys cannot hide from this.
All right.
So listen, we'll be right back after the break. But with us today, we have Scott Ladner. He is the CIO of Horizon Investments, and we're going to be talking about sectors. We're going to talk about commodities. We'll even quiz him about cryptos. Maybe he has an opinion there as well. But please stick with us. We'll be right back after the break.
Buy, hold, sell, brought to you by Crosscheck Management.
What does it mean to be a leader?
It's taking my first solo flight.
At the University of North Dakota, we lead our own way.
Welcome back to Buy, Hold, Sell. Well, with us today is Scott Ladner. He is the CIO at Horizon Investments in Charlotte, North Carolina. And Scott, one thing that we really would like to do is get an idea of your investment strategy at Horizon Investments, because I know the audience wants to know as well.
Yeah, sure. I appreciate it. Look, so Horizon, we're based out of Charlotte. We run a little south of $10 billion. And we're what's called a goals-based investment management shop, which basically just means that we run money for mom, not for mom's pension plan. So we really focus on sort of retail clients and clients, basically, connecting portfolios, connecting financial plans to portfolios. Long story short, and in furtherance of that, we have obviously some SMA portfolios and things like that. But we also run a series of mutual funds that span the gamut from everything from sort of kind of high yield timing, tactical fixed income sort of strategies to sort of traditional global macro tactical strategies and a bunch of risk mitigated types of strategies as well. So a lot of risk mitigation strategies, spanning from sort of tactical things to option based things to low vol stuff and the full gamut. And then we actually just started launching active ETFs as well. And so we just launched 2. And we're launching another 7 here in a couple of months, and probably another 7 or 8 in the fall or the winter time. So that's it's an exciting time. We're really blessed.
Todd, it's strange that since he first was on our show, he's now launched 7 new ETFs.
He's on fire.
Quick.
I think correlation is causation. All right. So in your risk-oriented ETF, while the market is, taking a breather, how would somebody benefit from your risk mitigation ETF?
So on the risk mitigation side, the risk mitigation ETFs are coming here in this next launch. But on the mutual fund side, those are, there are a couple of them that use an algorithm that we developed over about 10, 15 years ago that's been modified since then. Obviously, it's called Risk Assist. And those are sitting, they essentially take money out of the market in certain conditions and put it back in certain conditions.
Okay.
They're basically sitting right on a place where we're about to start taking some money out of the market. I haven't really much yet, but we're really close. And so if the market goes down further, people are basically buying into a fund that will hedge very, very quickly. And if we rock it back out from here, if something happens and we start rallying, basically participate fully in that type of rally. So that's
cool. I will say to Todd that, what's the number now? We've had 18 times in the last 10 years that we've had more a 10% or more correction.
Yeah.
But in the last 30 years, only 3 times did it actually become, a bear market.
Yeah.
What I'm getting, again, because I just judge my texts by how nervous people are, they forgot that there's a thing called a 10% correction. I mean, we did have one, in 2022, but I think everybody's just like fat, dumb, and happy here that, geez, gosh, Toby, my portfolio's up 65% this year, or last year, or so that's what I'm expecting this year. It was up 80% 2 years ago.
Yeah.
I think many people just lost contact with the financial gravity.
Yeah. How about that, Scott? I mean, do you have your clients that are really just thinking the stock market just continues to go higher and they're nervous now, or did they come into you with the expectations that, okay, I know that things might be volatile?
Yes, people are a lot more nervous than they are euphoric at this point. I mean, this does not feel the chatter around us right now is not one of an SP down 8. I mean, chatter is more like it feels like we're down 25.
Yeah,
and so it says, that's the kind of conversations we're having. Is like, guys, we're down 8. I mean, this happens, as Toby said, this happens really frequently. This is not unusual. If we don't get a recession, this is probably a pretty good buying opportunity. But it's, it's highly uncertain, and people are just a little freaked out.
And it's not just the uncertainty, but it's the certainty of uncertainty. We haven't known the tariff thing. We haven't known this idea of we were coming into this thing and we were going to be cutting taxes and cutting regulation and merger and acquisition, and everybody was jacked up. And then I get the New York Times on the weekends, and they put a one-page page together of what happened in Trump week. And there's been 75 to 80 different things happening every week that have never happened before. Now, at some point in time, I hear you on this. People, nobody likes to act when they're living in a cloud, in a fog now. And I think what I'm saying is, people are really just like, can I have more cash? Can I just, tell me when it's over, Dad? Because it's no one's ever been here before. And just because I've been doing this for 40 years, and so is Scott, this is all new territory.
It is.
Right. Scott, tell us, being CIO, we're closing out Q1 now. What do you think for the rest of the year? What's your favorite sector?
Sector-wise, we're starting to kind of gravitate towards, at least in the U.S., we're starting to gravitate towards things like equal weight tech. I don't think you necessarily need to own the mega caps, at least for a little bit. At some point, it'll be time for that again. I don't think we're quite there yet. But again, under the assumption, I'm playing under the assumption that the AI thing continues and is real, and it's going to start to expand out. And I don't know how to pick all of those winners right now. But I do know there's a large swaths of that universe that can still benefit from that. So that's one area that we're certainly looking at. If you have Staples, congratulations. I think you probably have, Toby. That's been obviously a great trade. We're probably getting. I think we're probably measuring in a couple of weeks where we're going to start probably trying to peel out of that stuff. So kind of peeling out of the more value-y stuff, probably getting back into some of the more growthy stuff is going to be the playbook. I don't think we're quite there yet. I mean, I think we need another few weeks of sort of sitting through some of this, the fog of war kind of crap.
Yeah.
But it's that's kind of how we're starting to prep portfolios and start to turn them that way.
Well, my wealth management clients, they said, Toby, you've never had McCormick spices in a portfolio before. You've never had Procter and Gamble. You've never had. I mean, and I said, well, that's the protection. That's the I call it the timeout. We're taking a timeout from growth because we got 15 years of growth in 2.5 years. And trees don't go to the sky. I've used every euphemism I can come up with. And then I just call it financial gravity. Financial gravity. At some point, the trees that did grow to the sky come back simply because they run out of air up there, and the air means everybody who could invest has invested, and they're taking profits to go to places that were down living on terra firma, but people look at me like, who are you? I have a twin brother, Todd, and he said, did your twin just come in here and take over?
Yeah, you're right. And McCormick, by the way, is based in Baltimore, so it's definitely a winning company. So, so Scott, what about your least favorite sector for the rest of the year? I'm sure there's one out there.
Yeah, I mean, look, it continues to be energy. I mean, like we don't look. I don't think the economy is going in the tank. One reason you don't like energy is if the economy is going in the tank or globally, you just get a big demand shift down. We don't think that's the case, but drill baby drill is sure as heck not good for the price of the commodity. And these like oil, I'm talking about like the sort of the integrated guys, and they need a higher price of oil. We don't see that coming anytime real soon. And so like, we don't think it's a complete dog. But it is not one we think is going to end up keeping up with what we think at the second half of the year probably should be a reasonably good market again.
Okay. Yeah, the Saudis and the other group decided that they were actually going to start pumping oil again and to stop restricting. So I'm totally with you on that. In the energy companies that supply energy to AI data centers, et cetera, have you played any of those, the Vistras and the Constellation and Southern and those guys?
Yeah, we have a bit, and we do that through we actually have a little like an AI portfolio and an AI basket. It's in that sphere that we play with that, and so we are getting some of that through there. It's like, I'll be honest, like that, I've got a couple of analysts that do all that work, and they're really good at it. I'm not the expert in it, but I know that we've got some in that space, which is obviously really important.
Well, I just, again, living in this brand new world. If you'd have thought that the fourth best stock for us over the last 18 months was Vistra, a power company, I would have bet you $1 billion trillion that you were smoking some serious dope.
Yeah,
and guess
crazy,
what?
right?
It's number 4 in the last 18 months. And we now have a service you may be interested in. We pay for a service where it tallies up what the Reddit, stock twits, all the retail stuff is talking about. And I'm finding this is not shocking to you. There's a very high correlation between how many comments on Vistra or Oklo or any, the small nuclear reactor, blah, 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 and the pricing.
Yep.
And it's, I go back to the old first thing you learn in Econ 101 as stocks, that there's only thing that two things affect stocks. It's greed and it's fear. And some derivative of that makes the stock go higher or lower. But we went from this ultimate 52,000 comments on Vistra in a week from dudes thinking, dude, what does Vistra do? Look at that chart. To, oh my God, it's down 20%. I'm ruined.
Right. I love it when you mention that, when how you do the voices. It's great. I know the audience loves it too. So Scott, quickly though, what about we've had a number of guests on Buy, Hold, Sell that are very bullish right now on gold and silver. Do you have an opinion?
Me too.
Not a smart one. If I'm being totally honest, it's like I'm definitely tourist money in that space. So I understand the arguments, and I don't have any I don't have any like strong counter to the arguments. I think they make a lot of sense. I think central bank buying globally is going to only accelerate, especially as as the U.S. continues to flex its muscles on the sanction space. And so like that, all of that makes a lot of sense to me. I just know that there are a lot smarter people out there than I am in that world.
Todd, he's a little humble, and we're going to beat the humbleness out of him. You know that?
Yeah, well, he's great, obviously, and
Yeah.
I see what you're saying there, Toby. But I do have one final question before we conclude the show. Actually, I have two final questions, but this final question is investment related. Do you have an opinion on the cryptos at all?
You know, like, yeah, we do a little bit. I mean, I do think. Look, I think if you're going to play in this space, at least for almost everybody listening to this, like it's Bitcoin or nothing to me. I mean, Bitcoin's the dominant one. You play that one, or you don't play at all. But I do think there is actually space in most portfolios for, call it a 1 to 3 type percent position, because the mathematical characteristics of the thing are such that it's not terribly, right now it's a little bit correlated to stocks. It's not always correlated to stocks, but it's not terribly correlated to a whole lot of things over time.
Yeah.
And it's got, it's like, look, the left tail is truncated at 0, you can lose all your money. It can go to 0, but it can also go to like 1 million. If the Fed comes out and says we're going to start tracking, we're going to make all money digital, we're going to track everything you do.
Oh yeah.
All of a sudden, there's a massive privacy bid for something like Bitcoin. So I can make a cogent case on either side of it. But just the mathematical characteristics of it, like make it make sense in portfolios on some kind of limited level, and just sort of hang out and see.
Yeah, Todd, I will say that you have to have a very broad imagination to have made money in Bitcoin. You couldn't think inside the normal box. You had to imagine the fact that there will only be 21 million Bitcoins ever made, and we're at 19.8 million. Again, beyond just the amount of Bitcoins that's used for criminality, let's take that aside. But the scarcity value, it's very liquid now. I'm still looking for my wallet with the 50 Bitcoins that I have at about $80.
Yeah, I hear you.
And oh, by the way, 25% of Bitcoin is dipshits like me with a wallet that is locked up forever.
Yeah,
it's true.
Well,
I mean, it's true.
Jeff Hirsch from the Stock Traders Almanac. He has been following Bitcoin. He calls it Bitcoin seasonality. He actually sees, just seasonality wise, it should be rising going into the summer. So that's what his charts are saying. Be interesting if that does come true. But final question, this is probably the most important question for all. Scott, who do you have winning the NCAA basketball tournament? Even though your UNC Tar Heels are out, I'm sure you're watching.
Yeah, I mean, look, my head would say the Blue Devils, but my heart will never go there.
Yeah.
And so like I guess I'll just go. I'll go with my dad and I'll say go Blue.
Okay, there you go. What about you, Toby?
My money's on Blue as well. I'm a UCLA guy. We actually got into one game until our Mara got hurt. So it's 100% correlated with Nils. Just remember that. 15 out of 16 we got right. Sully and I did in our basketball pool, just with the spreadsheet of the amount of Nils and go down the top 15. It's forever changed, Todd.
Okay, that's right. And Toby mentioned Sully. Speaking of Brian Sullivan from CNBC, the two of them are very tight, especially when it comes to college basketball. I'm picking the Maryland Terrapins, though, to go all the way. We have a big game tomorrow night against the Florida Gators. We'll see what happens.
You're such a homer. You're such a homer.
You gotta be. You gotta be. But listen, guys, we're going to close it out there. So, Scott, thank you so much for joining us on Buy, Hold, Sell. We can't wait to have you back, especially in the second quarter as we follow up this discussion.
Great. Thanks, Todd. Appreciate it, man.
Thanks.
Absolutely. And on behalf of Scott Ladner and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us on Buy, Hold, Sell. Coming up tomorrow, we have Danielle Shea, Wealth-Wise on Friday. You're going to have Barry Ritholtz as the featured guest. And coming up on Money Mavericks with Tobin Smith, Katie Stockton is coming to the show for a very exclusive one-on-one interview. A lot to look forward to through the Biz Talk Today channels and shows as well. So we can't wait to bring them all to you. Thanks again for joining us, and we'll catch you next time. Take care.
Buy, Hold, Sell, brought to you by Crosscheck Management.